Hello, Oracles. Oracle Tim here from Oracle Investments. Another red bloody day today. We kind of assumed it was going to be that way. We know we've got the Fed chair speaking tomorrow, discussing the Fed's decision as to whether they're going to taper sooner, raise interest rates sooner. So the market right now is reacting to what they think is going to happen. Clearly, we can see that they think that the Fed is going to be doing this because the Nasdaq is down more than everybody else. And now the reason the Nasdaq is down more than everybody else is because when interest rates go up, high growth stock companies usually take a hit because they're the companies that may not be profitable yet or are just barely profitable, and so they don't have as much room to grow when they're in a higher interest environment. And this is also why over the last 18 months, we saw such an explosion with growth stocks, because when interest rates are zero, they have a lot of room to flourish. And so tomorrow afternoon is going to play a big vital role in what happens going forward for the next month or so. Part of me wants to think about like last week when we got the CPI data, it came in high as expected and the market went green. Part of me thinks that if all of this pricing that we've had right now, the last 2 days of red, are the pricing in off the assumption. We still have trading tomorrow, so we may see some more red tomorrow as well. The Fed chair talks at around 2 o'clock tomorrow afternoon. That's when the meeting ends. We should find some information out after that. Until then, we may see some more red. But when we finally get some clarity, then we might actually go green, regardless of what the information is. This may end up being a situation of sell the rumor, buy the news. So if the Fed comes out and says, you know what, we are going to taper a little bit sooner, it's been priced in, okay, now the market knows what's going on. Honestly, a lot of the red that we get is because of uncertainty. So whether the clarity comes out to be the news we want to hear or not, we get clarity, which oftentimes leads to green. And now, of course, Powell can come out tomorrow and say that we're going to taper sooner, finish tapering by March, throw up interest rates in April. The market can lose its minds and just everything is gone and we're going to go so deep red. That could totally happen. Tomorrow's decision is really going to make the determination as to what we see going forward, and that'll help us make a better game plan on how to determine what we want to do with our portfolios and stocks. And now something I had learned the hard way over the last 2 years is discipline and having cash on hand. The reason I like to have 5 to 10% of my portfolio as cash on hand are for moments like this. We never know when the market's going to go red. We never know when some crazy event is going to come up, causing things to come down like it is. Most people were thinking that the inflation was going to be transitory. Fed Powell said the same thing. Turns out it's not. All of a sudden he changed his stance, market goes red. A lot of people thought we were going to have a nice euphoric rally going into the end of the year. Now here we are turning bloody red on downtrends in almost all the stocks. And so by having this 5 to 10% cash on hand, it allows me to buy into the stocks that I have high conviction in. Tesla obviously being one of them, but I can still buy into little pieces here and there. Buying a little bit of Nvidia, buying some Disney. Little things like that I can buy into, but I'll do it at little bits at a time. I still keep close to that 5% on hand, but I do add to it to continually have cash to use. And now if you're wise and you know how to follow technical analysis, and you had some swing stocks that you were trading, or some of your stocks were kind of at the top and you're like, you know what, they're a little bit fluffy right now, you could have sold those off, put that cash on the side, and kept that in your pockets for moments like this. Most of the time, it just comes down to discipline. Discipline of not just buying everything on every dip. That's why I dollar cost average. That's why, for me with Tesla, I'll buy it every day and buy a little bit more on each dip because I don't know where that bottom is going to be. And, I think that regardless of where we're at, if it falls even further, we're still at a great price. But I don't know for sure when that bottom is going to be, so I'll just use that cash I have on hand and keep on buying little bits. And one of the things that I also talk about is, if you don't have the cash on hand, do you have a cash play? For me, my cash play is Apple, and Apple has been doing very well lately. literally just broke its upward trend today. So for me, if I didn't have this cash on hand and I was like, you know what, I really want to dump more money into Tesla or something else, I could sell off some of this Apple because it's breaking its upward trend. It was getting close to the $3 trillion mark, just got a nice another price target upgrade to $210, but it's been on quite a run lately, broke its upward trend, so it may come down. So, you know, if I needed the cash, this would be the time for me to sell it. And I wouldn't sell all of it. I would just sell whatever I needed to buy in because I still like Apple long term and I still want to keep those cash reserves. Because for me, the cash in Apple is going to be more valuable than just regular cash on the side. Because my cash on the side is losing money due to inflation. My cash in Apple is going to be growing over time. And I did have a couple of requests for stocks to go over today. So the first one I'm going to go over is AQN, Algonquin Power and Utility. It is a utility and renewable energy company out of Canada. Seems to be a decent play. I was looking into the company. It's on a bit of a downtrend right now. And looking back just even 2 years, this thing just nice flows between $14 up to the high $17, and it just has this nice wave going. It's now under that $14 mark. I think a lot of the macro environment is what's pulling it down. I still think it's a good play. It gives out dividends. So if you're looking for a less expensive renewable energy play, mine are in Tesla and ENPH. But, you know, I know not everybody can buy fractional shares. If you're looking for something to get into, that's not a bad play. BEP for me is a good one also. Again, these energy stocks with dividends are nice. Perhaps if you have an IRA, that might be a good place to put your money as well in your IRA to get those dividends. Another one to get into perhaps is LAC. It's a lithium company. My one that I have is SLI because I didn't get into LAC when I wanted to, but LAC just came down from $41 and dipped under 30. It's been on quite a run lately, so cooling off kind of makes sense, especially with the macro environment that's going on. But definitely take a look at it because the lithium plays are going to be very important going into this EV world that we're about to enter. The lithium plays a major role in all the batteries. So if you have a company that's going to be supplying this, that company naturally is also going to grow. And now if you're not sure what lithium company you want to get into, if you want to get into them, there is a great ETF, LIT. I was in that for a while, made some good money, it grows quite well. So if you're looking for something to get into that's a little bit slower of a growth, but encompasses all of these companies so you don't have to make that decision, LIT would be the way to go. And now on to Tesla. So Tesla today saw quite a dip early on. I scooped up quite a bit more. I think I picked up about $40 worth more. It's hard to tell if Elon sold today just because of the way the stock came back up and rallied strong at the end of the day. That was exciting. I was hoping we were going to finish around 960 today. I wanted to finish at least flat, and we were pretty close. You know, we were down about almost 1%, but that's way better than being down the 5%. I'll find out tonight if Elon sold. I'd actually be interested because if he sold and we still finished the way we did, that's excellent news because that's one step closer to him being done with his sales and the stock's still holding around 950. And to dip into fundamentals a little bit, news came out of China about production numbers. Production came in at 56,900, which was ahead of the 55,000 from October. But in October, we had a week off in production over there. So we were kind of hoping for a higher number. I was predicting around 69 to 70,000 in production for China for November. So it's a bit shy of my numbers. Still good growth, still going in the right direction. And I believe that they're still projecting to get 500,000 vehicles produced for the year. So we'll know obviously in January how December came out. It's still going to be a super successful year. I believe that this is mostly supply chain issues pulling us back, and that's why we didn't have the higher numbers like we thought. But Elon has mentioned this, he's talked about it, said how important the supply chain issues are, and this is also why I reeled back my forecast for production for 2022 as much as I did, on the conservative side because I think that supply chain issues are still going to cause a problem for at least the first 3 months of the year. And as we discussed before, Tesla has broken down from the bull pennant that we were in. It is now in a downward trend, but again, so is pretty much everything else in the market. So looking at things fundamentally, is this a time to panic and sell? No. This is just the nature of things. Everybody is concerned about inflation. Everybody is concerned about what the Fed is going to do as far as tapering and raising interest rates. So for me, if you want to buy in, buy little bits here and there as we come down, dollar cost average, or wait until tomorrow to see what happens with the Fed. We may crash further, we may go green. You know, you just got to pay attention to see what's going on, see how you want to play your portfolio. But again, if you do not have cash, or if you are struggling at the point where you're like, you know what, I never seem to have the cash during these dips. I was guilty of that regularly. It drove me crazy every time I saw these dips, especially when the first COVID wave hit. It comes in here and I'm like, oh my God, the market is so red and there's nothing I can do because I have spent all my cash already. It took me going through that about 6 times before I finally learned my lesson. And I was like, all right, I am going to be very strict. I don't care how much the market dips. I am not putting my cash in until I have this reserve built up to be able to take advantage of this. And even when I'm built up, I'm not just going to go dump all of my money into the market. I'm going to be wise about it, and I'm going to put little bits here and there. And for me, that is the reason why my portfolio is up 30% year to date. It's because I have taken the time to keep this cash on the side, and I'll buy when it's red. When you're sitting back and you're like, oh my God, my portfolio is down so much. Oh my God, why is it down so much? What should I sell? Nothing. Your mentality when the stocks are just this red and your portfolio is this much in this much pain is buy. You should be buying at this point because the market is going to turn around. The market is going to go green. And because you bought when it's red, your portfolio will be even greener. You know, think about anything you buy. You're going out for holiday shopping. Do you want to go out and buy stuff for twice the price? Or do you want to buy it on sale? Obviously you want to buy it on sale. So make sure you've got the cash put aside or have cash plays, perhaps funds that you can pull money out of to be able to buy things that are on sale like we have right now. Just a reminder, I am not a financial advisor. I am just a wise investor. I am always learning as well. I still make mistakes. I make decisions that are just stupid decisions. It happens, but I have been learning a lot, and this is one of the really big things that I have learned to help grow my portfolio, and I want to be able to share this with you guys, and hopefully you'd be able to do the same and grow your portfolio also. Let me know in the comments below what some of the hardest disciplines you've had to learn while investing. Let me know where some of the things are that you're still trying to learn while investing. Thank you all so much for your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am now on Twitter. I'm sharing a lot of information on there. You can see my link down in the description. And I'm also on Patreon, starting to get that built up. But as we're coming up to 2,000 subscribers and I'm going to have a giveaway, the best way for me to be able to contact you guys to be able to give this hat away would be through one of those two links down there. So check the descriptions for those two. Follow me on them both. And we will see you guys all later. I will update you in the morning with any Form 4 filings if they come out. Otherwise, thank you so much. Have a great one.